Here we are with multiple time frame analysis, and basically what I want to do is just scroll through. This is a PowerPoint that I used to do, and I used to talk about, we only have half an hour, so I'm going to brush through a lot about this and get right to the meat and potatoes of this thing. And the first thing to talk about is symmetry and fractals. All right, fractals are patterns that repeat at different scales. They appear in many natural systems such as coastlines, rivers, and many plants, including ferns. So basically, when you're talking about the market, every change in behavior from an uptrend to a downtrend and back again is basically a form of a fractal. And during those major trends, you have the ebb and flow of the market. And of course, those also are fractals within that. All right, since the stock market is a system that arises from human behavior, fractals are part of its price history as well. And since human behavior is repetitive, fractals should help us to calculate the probabilities of future market moves. Basically, there was one trader that I really liked a lot, and he basically would call the chart, when you look at it with all the prices, human DNA, because it represented fear and greed in the markets, and the change in behavior often represented the way of humans thinking, so to speak. So it's kind of interesting, good way to look at it. All right, so let's jump into it. Well, first question I want to ask people is, when you look at this price structure on this chart, what time frame is it? Okay, can you tell me what time frame that is? Probably not, right? Now that kind of brings up an interesting question. If I can't tell what time frame it is, I could be looking at a 1 minute, okay, and I would be looking at a longer term time frame, okay? And the reason why you care, Jerry, is simply because the point I'm going to be proving to you is that if you have a good trading system that works off price structure, it should work on all time frames and all markets. There are several systems out there where they'll tell you it's not for day trading, it's only for a certain market or a certain time frame. So when you hear that, right away you know they're not working off price structure. And price structure is really key in looking at multiple time frames and using the same software across multiple time frames. All right, so in that particular question, that was a stock and it was a daily chart. Well, what about this one? All right, any ideas what you think this might be? And the answer, of course, is no, because you can't tell without the X and Y axis. And that happened to be the S&P futures contract on a 2 minute time frame. How about this one? It's range bound, kind of. I could probably draw a pennant on there. But again, I can't tell you exactly what it is. And that happens to be crude oil on a daily chart. All right, here's another one. Nice Elliott wave 3, 4, going on a 5, and that's applied materials on a weekly chart. All right, so, you know, the reason is that market symmetry is the same across all time frames and literally across all markets. The only time I would say you could probably tell the difference is if you had low liquidity on the very short time frames and it looked erratic. Okay, that you sometimes can tell, but for the most part, you really can't. All right, so let's keep going on here. All right, so the situation with this is what I want to look at next is the reason we use it, okay? And the reason we use it is that it identifies different opportunities across different time frames. And I'm just going fast across here. All right, and again, I like this chart here because it shows the different fractals in market symmetry across a trend, even a pullback, and of course, a move back forward. Now, a lot of these areas, okay, that create pullbacks here, especially if you're day trading, you know this, these are all order blocks and liquidity traps, okay? All right, so liquidity traps, what I like to do when I day trade is I look for fair market value gaps, liquidity traps in a trend. I identify the trend using our software, and then of course try to trade in the direction of the trend using order blocks and fair market value or FVGs. Okay, so you know that is kind of just a way in which you can use these ebb and flows in the market as opportunities, and you see them across all time frames of all markets. And when you get to a major area like this here on one time frame, you can actually look on another time frame or a lower time frame and see the actual price bars inside a movement like this to even better time your entry. So that's kind of an interesting way in which you can look at things. I'm going to keep going here. This is an example of multiple time frame analysis. So in a case like this, on this particular market here, we got the weekly chart over here, daily here, and just a 60-minute here. And you can see that on the weekly chart, we've drawn in some fibs, all right? And on the daily chart, we're actually seeing a lot more structure inside this move. And one of the best structures here was to see this particular area hold here and then move off its bottom. So you had a situation here where the market tried to come down, took out the liquidity down here, and then reversed itself back to the upside. So in a case like that, that would be a prime entry, provided it looks like you've hit the fib retracement area on the weekly chart. So by using the weekly chart, you get a bigger overall picture, all right? And then using the daily chart, you can really isolate your entries. And then what I do on the 60-minute chart too is I also look for momentum. I want to make sure momentum is moving up and we don't have a change in trend, identifying a temporary correction. So that, and again, you can apply this on any time frame in any market. All right, here happens to be the MES. All right, same type of thing. So in the MES here, we've got a downtrend in place. All right, we've got a little bit of a bottom here forming, okay, right there. And so any trend against this right now, you kind of got to be careful because we may not have the end of the trend in place. So you need to know that. All right, let me go to real charts for a moment. Okay, and we can even take a look and see what the NASDAQ is doing here for some of this stuff. But in a case like this, all right, what we do is we look at, in this case, different time frames here are based on the 5-minute, the 1-minute, and the 15-second. And so we're making our decisions based on these different time frames. And what's interesting here is we got a fair market value area here, and we took out liquidity once, but I'm very suspect. I want to make sure, I imagine we could take out that liquidity again. So I would wait. If we get above the fair value gap here, we close above here, then I would go long. Chances are we are not going down here. But until this move down is over, I want to see if they'll take out the liquidity here before they run it back up, things like that. Notice here we had a pull up in the ongoing downtrend with a bearish fair market value gap, and it got just on top of that, but did not take out the liquidity up here, okay? But it did take out the liquidity here, and then it came back down. So, you know, those, and look at the 5-minute, we had a major area here on the fair market value where it took it out with 2 pyramids to the downside. So that's indicating I want to be taking short trades down here until we get to a liquidity trap bottom, okay? So that's kind of where we're at this particular point. So that's how multiple time frame analysis can actually help you. And if you do it over multiple time frames, you get a bigger picture that you can have context with, and then you can isolate it into a smaller one. And this happens to be day trading stuff, but you know, you could do it also on the longer term stuff here too. So in a case like this, we got this particular market, USAW. All right, this has been coming down for quite some time, obviously. All right, and then we had a move off its bottom, and some of the indicators we use indicating that this move off the bottom should continue and get above 18 at some point. However, where do you get in and where do you isolate your stop? Well, if you're a long-term trader and you don't care about the short-term time frames, then you want to give your stop a lot of room and probably put it under this pyramid here until we get to the next high. But that's a long way away, okay? That stop, that's very far, so your trade size is going to be very small. You'd have to check and see if maybe an option makes better sense at that point. We got 3 PTFs, which is the center indicator here, and that has a 75% probability of indicating more highs. So I kind of don't want to short here, right? I want to stay to the long side. So now my next job is to find the best entries for the long side. All right, we had a pyramid here. We had a pullback here, stayed above the pyramid. And notice here, what was kind of interesting down here is that we took out liquidity here. So now it's ready to go. Our next liquidity area is here and then above here. So usually when you take out major liquidity, all right, and you're looking for an uptrend, and you're in this area here, wait until it takes out the liquidity and then look for a long trade. And this just worked out great. Took out the liquidity, bullish pyramid, boom, okay? And so that's the kind of thing that you can use the multiple time frame to make sure you're in sync. And in this case, it's bullish coming off a bottom on the weekly. We got a nice liquidity taken out here. We got a nice pullback to put us back in, all right? And some of you may have gotten in a lot earlier up here, okay? But in any case, if you didn't and just showed up in the middle of, let's say we're right here when you showed up, wait and see if that liquidity gets taken out, okay, which would be down here. And then if it does, then you should see the trend resume if it's going to. So that can be a very powerful signal right there. So definitely you want to look for confluence in all time frames. All right, especially helpful, again, especially if you're a scalper like we are during the intraday day for our prop firm accounts. You got to be careful to draw down. So you got to really isolate some very critical entries and that fair value gaps, order blocks, and taking out liquidity along with making sure you identify the trend is really key. Okay, that's very important. So keep that in mind. I also too want to put a link up here. I've got a lot more information on multiple time frame analysis in a course that we have, and I put that up there as well. So if you're interested in this topic and you want to review it and more in depth, that course is a great place to go. And we talk about how to set up your charts for different types of trading, whether you're position trading, intraday trading, and so forth. So it all depends on what you want to do and how much time you have to devote to it. All right, any questions? That's kind of what I wanted to cover today, just to kind of give you an idea of how to use the different time frames. Now, if you are not a day trader and you just position trade and you have end of day trading, there's nothing wrong with that, okay? You can have 2 charts up. You can still use it. You can have primarily the weekly and the daily chart side by side, just like that. Cliff, I'm not sure you have intraday time frames, but if you don't, you can set it up like this and make sure that you're in alignment on the weekly and the daily. That's fine too. Okay. All right, any other questions? Yes, Dave, you can set this up on TradeStation as well, of course, okay? I don't have my TradeStation open right now, but all you have to do is create multiple charts and then link them. That's another thing I like to do, is link the charts. Pretty basic stuff. You just link them, and then when you switch symbols, it'll switch all the charts you want to look at. You can also create a NinjaTrader, which I do, is you can create the market analyzer at the top where we have our scanners, but you can also create different tabs with different indexes or stocks. So you can toggle back and forth, and if you have the market analyzer tab linked to the charts, it'll automatically trade those as well, or not trade those, but change them. The most important thing I think to do when you're trading the markets is you first got to figure out what the trend is. Because once you figure out the trend, then you can trade the fair value pullbacks with pyramids after them for the highest probability trades. So figuring out the trend is really important. And if you're in a sideways market, then take a look at the context of where that sideways market is occurring. And you know, you can always take a look at the higher time frames too. All right, you can have like Tesla here. All right, that has a little more action. Okay, so we think it's going up here. All right, we had some pullback here. Still pulling back a little bit, so we'll see. This area here, to me, could be a liquidity trap, so we could pull back down and then look for a buy up here. So that's something that could be coming up here. I don't see too much areas in here, maybe a little bit of one here, but that's not a very strong one. But in any case, you know, the pyramid here formed right after this one. And this one here, I don't think, I'm trying to figure out, doesn't look like it may have taken out this one here, but I would have rather had it taken out one of the more severe ones here. So really at this particular point, these are your two big liquidity trap levels on Tesla right now. So probably one of those will get broken. I imagine the one to the downside before we see, excuse me, see a lot more movement up. But we shall see, okay? This may become one and we may come down and do that. So we have to wait and see how it goes. But in any case, you can just use two charts, you know, weekly and daily. You can go out to a monthly chart if you need to, all right? You want to take a broader look, you can do that. So it all depends on the clarity. If I don't see something clear on one time frame, I will back it either out or in until I figure out with clarity what the trend is. And the trend right now is up on this, okay? So I want to be looking to go long again once a liquidity area is taken out. All right, so that's it for this week, okay? We'll post this on YouTube, and you can check it out later. And I put all those links up in the chat area, so you can check that stuff out. And thank you for being here. Great turnout, as always. And I'll leave the room open for a few minutes if you have a few last-minute questions. And before I close it, I think I got them all. Let me scroll through. I think I answered that one on multiple time frame already. And Steve, that's for you. Monica, hold on, Monica. I don't think I got this one. Data. What kind of data do you have? I'm not really sure I know what you mean by that. Oh, end of day versus real time. Okay, so if you have end of day data, if you're using Ninja for that matter, it does matter. If you have TradeStation, they're going to give you the intraday data too. But on NinjaTrader, you have to have an intraday data feed, and you can get that through their brokerage, or you can get it through what they call Kinetic or whatever. You may have a broker that gives you that already that will tie into NinjaTrader. and a compatible broker, so you don't have to worry about buying it. But if you want intraday data, usually you have to pay for it in some form or fashion, either have an account, a brokerage account, or actually be paying for it. But if you don't need intraday data and you're just position trading and you just need a daily chart like I have up here and a weekly chart, you can use the free end of day data that's available on Ninja. If you have TradeStation, you have access to all the different time frames. So you have that ability too. Now, if you're into day trading and you want to go the Apex route, they'll give you intraday data on the futures markets, not stocks, but on the futures markets. So you can get that as well. It all depends on what you need. Also too, you can get intraday data on Kinetic, if you pay for Kinetic, through NinjaTrader on stocks. Okay, so keep that in mind as well. All right, let's see what else we got here. JP, how are you? All right, is it necessary to have a volume chart as you have on the weekly, on the daily, and the 60-minute chart? You mean the volume down here? I had it there. I'm trying to think why I had it. I think I was explaining something to somebody. But you really, as long as you have the owl, all right, and the momentum, that's usually good enough for me, okay? The only thing that I find helpful with volume at the bottom is when you get to a liquidity area, a serious area like this, that could represent the bottom of a correction, you might see the volume increase there, okay? That might help you a little bit. But again, the ABC correction and 50%, you know, putting it right on the fib will usually be good enough, okay? But yeah, you could add that if you want. Could definitely add that. You know, you can really get into it. You can do volume profile. I actually do like volume profile, and that's a different type of volume analysis. You got order flow. Order flow is kind of hard to use, but it is useful at certain times because it gives you the cumulative delta and things of that nature. Again, those are going to probably be more significant for day traders scalping the market for precise entries. So that is all stuff that we do use, okay? I do use order flow. You have to remember with order flow on the left-hand side of the price bar where all the numbers are, those are your sells, on the right, the buys, but also too, your passive sells and buys are on the opposite sides. So it can be a little confusing on how to read it. So you could have, for example, aggressive sells on the left, those are your market order sells, and then you could have your limit buys, and they'll show up on the left too. So it's those are called passives. Okay, so it's kind of, it's a whole nother lingo to learn how to use that, but it's fun. Okay, but that it's confusing. It can be quite confusing, but it can be quite helpful if you're approaching a bottom or a top to see if there's any unfinished business, orders left, or if they absorbed all the orders. For example, the buy orders were all absorbed with sell orders. You can tell that through order flow once you learn how to read it. And that can be helpful because that can show a turn in the market. All right, guys, that's it for now. Have a good one, all right? We'll see you back here next week. Thanks so much for coming. Good turnout. Any last minute questions? I'll be here for a minute. Feel free to ask. And we'll see you. JP, you're welcome. Thank you. Jerry, thank you. Faye, I see you're here. Good. James here. Johnny, thank you. Cliff, good to have you here. Mr. B, good to have you here as well. All right, have a good one, everybody. Bye-bye.
Serving traders worldwide since 1998, TradersCoach.com provides educational services for traders and investors alike. We have developed trading software to help traders of every level improve their skills. Our site is dedicated to providing you with all the resources, software, and educational material you need to achieve your trading goals. It is because of our years of experience, attention to detail, and our exceptional customer service that TradersCoach.com is the right choice for you. Call us today.